Welcome to Quantum Finance. My name is Parker. I'm the head trader here, and this is our day trading recap from Monday, October 23rd. So starting here at the top left, we have the S&P 500 SPY ETF. Top right, we have the US dollar index. Down here at the bottom left, we have the 10-year yield, and the bottom right, we have the VIX, or the volatility index. So starting here with the S&P 500 SPY ETF, big gap down in the stock market this morning, but as you can see, getting bought up, breaking up through Friday's lows and getting a nice push up here into that about 1 o'clock area, as you can see, topping out at the same resistance level that we ran into on Friday before rolling down into the close. Looking at the dollar, as you can see, getting a slight gap down here in the dollar, push off the open, and then breaking down through Friday's lows and really selling off here. Big bearish reversal here in the dollar, as you can see, breaking down through major support levels and working its way down here towards the lower end of this range. Turning to the 10-year yield. So 10-year yield is in a pretty significant area, as you can see, opening up here right below Friday's highs, which is right below that 5% level, which is a very key psychological level for the 10-year yield. But as you can see, double topping here at that same high from Friday, and then really breaking down, getting down through that midline, filling the gap and selling off, breaking down through Friday's lows and pulling in down here into these lows from last Wednesday. So bearish reversals here in the dollar 10-year yield, which is typically bullish for the stock market. As you can see, we did get that bullish action here in the morning before rolling over into the close. I'm going to point out in the VIX, dude, we did have a big gap up here in the VIX, which did go along with our big gap down in the market. But as you can see, breaking down here as well, kind of the same price action as the 10-year yield, breaking down through that midline, then rolling down and breaking through Friday's lows and extending to the downside. So a bearish reversal here in the VIX as well. So when it comes to identifying the trades today, when you see this kind of bearish action, here, let's go to our watch list actually. So when we opened up, as you can see across the board here with the SPY, the NASDAQ, and the Russell, we did have big spreads here, right, in our oscillators. So when you see big spreads like that, you kind of want to be patient because, you don't have a lot of symmetry in the markets, right? The volume relative to the gap down and the momentum and everything. It's not ideal for trade entries, right? But as you can see here at about that, 10-15 mark, across the board, we did get bullish crosses to the upside. If you look at the Qs, you do notice here they crossed earlier to the upside at about 10 o'clock, but the SPY and the Russell did cross to the upside about 10-15. So when I saw these bullish crosses, right, and those breakdowns in the dollar and the 10-year yield, because if you look at that 10-15 mark, right, where those bullish crosses were, as you see here on the dollar and the 10-year, we had big reversals to the downside. So with that, I became extremely bullish on the market due to our bullish oscillator cross on our 15-minute watch list and our big breakdown in the United States dollar index and the 10-year yield. Also the VIX breaking down through these significant highs back here from last Thursday. So we can look at our 3 and 5 minute charts here. So as you can see, the significant level here, this is the lows from Friday. So we did have a squeeze coming in here. If you look at our 3 minute, we did have a nice squeeze coming in here with bullish postured oscillator and holding Friday's lows as support. So this was our first entry for call options. As you can see, getting long here into this midline support around this key level here from Friday's lows. And our targets were this 200-day moving average, right? If you look here at our 5 minute as well, as you can see, holding above that 5 minute midline with bullish postured oscillators getting above that zero line as well for a nice move to the upside. Actually, I want to go back to our 15 minute here. So as you see, the first take profit was at this 15-minute midline because these midlines, right, are very significant levels of support and resistance. So that was our first take profit, and then our second take profit was here into this 200-day moving average. You go to our 2 minute chart here. So as you can see, the entry was right in here as we were holding above the Friday's lows with those squeezes on the 3 minute chart. With our first take profit here into this like 11.14, and then our final take profit here. So we were looking at the 423 today's expiration call options. So as you can see, the entry was here at about this 51 cent area, and then into that push into that 15-minute midline that we were talking about. You're looking at a 60% gain And in that push into that 200-day moving average, you're looking at about a 100% gain. And as you can see, it did extend up through that 200-day moving average, looking at about a 118% gain on the day. So nice trade here for call options on the morning, buying these 3-minute and buying this 3-minute squeeze right above Friday's lows for a move to that 200-day moving average. Very significant level here on the S&P 500. That would definitely want to be your profit target here because the 200-day moving average tends to act as a very strong level of support and resistance. And when you're coming into it, it typically acts as resistance. As you can see, on Friday, we pulled into it and it acted as support. There's actually another nice trade opportunity here. As you can see, we ended up getting above the 200-day moving average, and we kind of consolidated, chopped around, and then as you can see here, we got another big squeeze on our 3-minute. So this wasn't actually another opportunity for call options. I do want to turn to our 15-minute watch list here. So as you can see on our 15-minute on the SPY, we were extremely bullish here, right? As you can see, we got through that midline, and we were holding above this 15-minute midline and the 200-day moving average. And we also had room up here to this upper extreme, which was the profit target here on this trade. So as you can see, we got that nice squeeze off the 200-day moving average into that upper extreme, right? Into our standard deviations, buying into the means and selling into the standard deviations, right? So this was also another nice trade, just buying here into this 200-day moving average support and selling when we got into that extreme. So we can go to our 3-minute and 5-minute here. I want to point out something here on the 3-minute. As you can see, we did have this nice 3-minute squeeze, and then we came in here and got a bullish cross right above that zero line. So this was a nice, also a nice way to identify that this trade was going to be a move to the upside. But I do want to point out here, right, that we were bearish on the 5-minute. So you got a push up into that zero line, right? And as you can see, we were bearishly postured, and that's when we got that big negative rejection here. But we also had that 15-minute upper extreme sitting here. So we had a lot of resistance here, right? So I wasn't expecting this to be a big trade, right? You're just looking for a quick pop-up to that 15-day or that 15-minute upper extreme, right? And that 15-minute upper extreme did line up here with our trade line here on our 5-minute oscillator. Right, so we can go to our 2-minute. So on this trade, we were looking at the 424 call options. Just moving it up here, right, to where below that 15-minute upper extreme was. So your entry could have been here. We also had a 2-minute squeeze, right, and we had upward positive momentum. So your entry was right in here. So you're getting in here at about that 49-cent level. And as you can see, taking profit into that 15-minute upper extreme, you're looking at about a 125% gain here on this second trade on call options, right? First trade was we were buying into that 3-minute squeeze. Let me go to our 3-minute, right? First trade, right? 3-minute squeeze to the upside, profit target 200-day moving average, right? Second trade, another 3-minute squeeze. The 200-day moving average acting as support for a move to that 15-minute upper extreme, right? Looking at our 15-minute, as you can see, holding above that midline, right? 3-minute squeeze for a move to that upper 15-minute extreme, which would be the profit target. As you can see across the board here, we were running into upper extremes on the NASDAQ as well. The Russell was not quite as strong. But, yeah, really nice trades today for call options on this bullish reversal in the market with that big bearish reversal here in the US dollar index and the big bearish reversal here in the 10-year yield. Also a nice bearish reversal here in the VIX. So nice way to take advantage of a bounce here in the market. I do want to point out here on our daily and weekly charts, as you can see, pretty average volume day today, as you see coming right up to that volume average. With majority, it looks like selling actually coming in today. Another reason I thought this would be a good opportunity for kind of call options in a bounce play, as you can see, we were running into this lower extreme on the daily. So we were pulling into the lower standard deviation here on the daily chart, and this typically acts as a kind of bounce zone, if you will. As you can see, kind of pulling down through it here, getting a bounce, pulling down into it here, getting a bounce. It's not perfect, but when you sell off this strong from that midline, from that average down to that lower extreme, this was overextended to the downside, so you were looking for some type of release bounce. But as you can see, getting a very large wick here with a lot of selling into the close. I actually want to talk about that here on our watch list. So as you can see here, we got crosses to the downside on our oscillators here. We had the Q's cross here at about 1:30. You had the Russell cross at about 1:45, and the SPY kind of cross here at about 2 o'clock. So we did have bearish crosses to the downside across the board here. As you can see, getting that strong sell-off into the close. This could have been, and also I was done trading at this point, but this could have been a decent opportunity to play a breakdown back down through that 200-day moving average. If you look at the 5-minute here, as you can see, kind of a head and shoulders pattern, the left shoulder, the head, and the right shoulder with your neckline, and then that breakdown through that 200-day moving average down here kind of towards the open, down here towards Friday's lows. If you do look here, we do also have a 3-minute and 5-minute squeeze with bearish crosses to the downside here. So this could have been another opportunity actually to fade back down, kind of to play with the trend in the market, right? Because we have been downtrending. I was done trading here at about 1 o'clock after these two trades, but you know, if you were still around, it's could have been a decent opportunity to, right, playing this kind of like bear flag breakdown through that 200-day moving average. But yeah, pretty wild price action today. Green candle coming in down here towards this lower extreme. If you look here at our weekly chart, as you can see, we did bounce here off this key level that I was talking about from these previous highs back here from January. So we're at a pretty key level here in the market. This could keep selling off. We did have a lot of weakness into the close, but getting a relief bounce today. As you can see, our RSI still selling off here and downtrending. Breaking through pretty key levels of support here as well. So definitely going to be interesting to see what happens the rest of the week here in the market. But that should do it for the video. Appreciate y'all watching. I'll talk to y'all later.